Hello everybody, Brian here from quantlabs.net. I just wanted to show you the stats function that's available in this membership, and basically what it is to use and look at over, let's say, last year of performance on different types of market assets. So for instance, if we go to finance or Yahoo Finance and we do a search on IBM, let's say. Now the markets are on a tear right now, so if we look at the advanced charts here, what you'll find here is, let me just clean this up, get rid of that, get rid of that, and here's IBM. Okay, so IBM's come along since, I'm not sure how far back this goes, but let me get rid of that. Okay, so we have IBM. Oh, I'm sorry. So this goes back a year. See, today is November 29th, and this goes back at least a year. Okay, so, or even a year to date might be good too. Okay, so here we are year to date for January. Okay, so let's do a comparison with the S&P 500 as a benchmark. Wow, I gotta tell you, this thing's pretty bad. Anyways, go back to our friend Finance Yahoo. All right, so we want IBM stock. Chart, and it's really slow. Okay, so we have an interactive chart. So this goes between November 28th and let's say, it says last year, which is not true. Oh, here we go. So we're zooming out. Okay, so that's good enough, I guess. So let's do a comparison with the GSPE, which is really the S&P 500. So we save that. So you can see here in blue, IBM, cyan, it's the S&P 500. So now what we're going to do is we're going to add in an outperformance. So let's say Amazon is a great performer, kind of like not in the exact same sector, but actually I'm going to replace IBM with something better actually. Or let me just do one more comparison, HPE, which is Hewlett Packard Enterprises. So here we have a couple of, we have the GSP, right? We have the HPE in pink, and in purple we have probably the best performer, Amazon. Okay, so we can clearly see the performance difference. So what I've done is I've gone into the stock sections, come under your dashboard here, and you will find the dashboard under stock. Now, generally, let me just see, where's my stock? Econometrics, stock and equity, this should be it. Okay, so we have our two stats analysis for HPE and Amazon. This is for today. Okay, so what I want to do is I want to show you, just clean up here again. Okay, so we'll load in the first one for Amazon, the outperformer. So here's Amazon. We now have this package here called stats data, which means we can download the data. There you go. So this package is now stats data 5, the latest one. So here it is. So here now we know we have the package for Amazon stats and a chart. I'll show you that in a minute. So we have that one, and then we have this other one for HPE, which is it's underperforming against Amazon. Okay, so now we can download the second package, which is in this one, number 6. So here we have HPE. So let's take a look at the two charts. These are, I'm showing you these on purpose just to show you the difference between the two charts and of the distribution from a statistical point of view. So this is the last year. Each one of these bars represents the total number of bars that line up between the percentage moves on the returns daily. So we have a few fat tails here. The bulk of them fall in this range here, actually just over 35, and a few in the range between 0.02 and positive 0.02 or 2%. Over here you can see the huge difference. You don't even have, well, you have some positive returns, but when you compare it doesn't, I mean, there's no fat tails. You can see here at 0.04, or not as many, and 0.02. So that means that there's more negative returns or less stellar returns versus this one. So that's the stark difference, because this one's not too bad, this one's not as good, and you can definitely see that in the charts, the pricing charts of the two. So here in pink we have, or sorry, in purple we have Amazon, and then here in pink we have HPE. So you can see that Amazon's clearly outperforming HPE, while the returns for the GSPE are not quite there. So if we do a comparison between the two distributions of Amazon and HPE, we can clearly see hopefully the difference. Where's my, so yeah, but there's actual more numerical data that you can work with. So for instance, there's a summary that I provide. Load up this preview software, and then I'll also load up the one for HPE. Okay, so you can clearly see, here's the differences. So once again, here's the charts that we just showed. More negative and less positive daily returns. Well, this one has kind of like a more normalized distribution. But here's the key. We can see here that the average moves are 0.015%. Okay, that's the average moves. Now, that's on a daily basis. Now, we want to typically, overall, on our targeted portfolios, get 1% moves. So, not every day we're going to get that, but on average, Amazon will beat that. But when you look at the overall mean of HPE, it's negative 0.002, which means it's not even a percent. It's negative 0.02% on average is the average number of returns, so, but it's negative. So you're going to get more negative than positive. And you can see that here in this important stat here, that there's more positive returns than there are negative returns. But when you look at this over here, it's, yes, the positives outweigh the negatives, but yet we still have a negative skew. We still have also negative mean, and our standard deviation of the move is not as actually the yeah, it's a little higher in the HPE versus Amazon. And then here, these are the fat tail analysis on the standard deviation moves. So basically what the standard, from what I understand, is, you know, once you have standard deviation 1 moves, which are these, and then we have standard deviation 2 moves, which is the fat tails, and standard deviation 1, which is these ones. So usually the bulk of the daily returns will fall into standard deviation 1, so we can measure that. And then we also have our 2, which are these guys, and then you can see that there's very few returns that fall into the standard deviation of the 3rd one, which are the extreme ones. So the tolerance is usually within these ones, but once you start getting into standard deviation 3, those are ones you need to be aware of. So let's say if you get more negative standard deviation 3, those are extreme moves in the pat tail, and if you get more of them where it's up here, you don't want to be invested in that stock at all. But on the other hand, if it's more positive, then you can be on this side of the table as well, which is a pretty good indicator, but what the chances of that are happening. You may get that in maybe penny stocks or article in stocks or assets that are getting a lot of positive news, and they're just getting positive extreme moves on their daily returns. So this is how you interpret these two. Again, I'll put more of these out there to confirm the distribution of these daily returns, but the idea again is to target those stocks that give you a higher a mean with a higher mean of at least 1%. So here we're kind of here we're definitely not achieving it. Here not so much, but we want to see 1% moves, and Amazon has a higher likelihood of achieving that than HPE. So again, when it comes to deploying your capital out of your portfolio, you want to be in assets like stocks or ETFs or indices or whatever that give you a better performance on those daily returns, so you can get better returns. So hopefully that'll help you out. So again, you'll find these posts in the category stock, and again, if you go under the dashboard here, you shall find it under stock and equity, these kind of stats. So hopefully that'll help you out later.